Honorable ladies and gentlemen, I'm Hiral Dadia. We have with us Dr. Virendra Chauhan, Head APAC Energy Aspects, joining in. Welcome to the show, Virendra, and always a pleasure to speak to you and get insights from you. Virendra, overall, with what's happening across economies right now, clearly, if you see oil prices, they have pretty much flattened out as of now. We did hear, from the OPEC as well in terms of the increases. What's the view that you have?
Yeah, I mean, when we think about oil prices right now, there's basically two drivers. There's one, concerns about the health of the global economy and a pending recession that's driving prices down. But then there's the supply side, and that remains a structural concern. OPEC this week has said that they may potentially cut production if Iran comes back and we move into a period of oversupply. And the way we like to think about it, despite all the concerns around a recession, despite all the concerns about various factors about substituting away from oil, etc., we still are trading at $100 per barrel. So it's a fundamentally still a quite tight market, even if there may be the potential or looming return of Iran on the horizon.
Right. So in terms of the move that the OPEC has taken right now, that they will go ahead and, they've revealed an export increase as well. They're increasing exports by almost 200,000 barrels so far in August. And Iran has led the charge by increasing its output as well. What's the kind of impact we could see in terms of oil prices?
I wouldn't expect a massive increase from Iran just yet, because the deal has not been finalized and there's loads of technicalities that need to be worked through. But the way, from our understanding, any return from Iranian barrels is unlikely before the end of the year. But in terms of what could happen right now, if, say, the US, the EU, Iran were to come out and make a statement, say the sanctions being lifted and Iranian supply will return to the market over the course of the next few months, I would expect probably a $5 to $10 sell-off in the price of oil. And part of the reason for that is liquidity is very, very thin. So it's quite difficult to differentiate between signal and noise right now.
Okay. So, sorry. And in terms of where even US goes, if you see in terms of natural gas, the prices are increasing right now. Mm-hmm. Yeah. You think crude will follow suit in terms of what's happening with natural gas, or do you think that pressure will continue?
Yeah, I mean, one of the reasons why global oil demand is not weakening as one may expect with where prices have been and are likely to go is because of what's going on in natural gas and electricity markets. At the moment, for many segments in the power sector, for example, it makes sense to use liquids, i.e. oil and oil derivatives, because natural gas prices are so high. So, the higher gas prices go, the more bullish that is for oil prices, because it effectively pushes up demand.
And with that, if you see in terms of the pricing side of it, clearly there is a clear battle for market share between Russia and Saudi Arabia, right? I mean, Russia has been sending huge volumes in terms of cheap crude to Asia. Simultaneously, Saudi Arabia is now eating into this new market share by reducing its oil price as well. So do you think this is something which could start putting pressure on pricing?
I wouldn't expect a wholesale change in Saudi Arabia's policy because, for the longest time, they've always been seen as a stable source of supply to the market, despite all of the geopolitics which has occurred over the past few decades in Saudi. The one thing that they've maintained is a stable source of supply. Now, obviously, what Russia is strategically looking to do is shift flows away from the West and to the East. And the way that they're doing that at the moment is by aggressively cutting their pricing and also circumventing the use of US dollars, i.e. it's willing to accept payments in dirhams, it's willing to accept payments in rubles, etc. Now, I mean, personally, I would not think about this as in terms of a market share battle between Saudi and Russia.
Okay. So what's that range we should be looking at in terms of crude oil?
Yeah. I mean, near term, I would say 90 to 100, but by the end of the year, early next year, depending on what happens with Iran, I think we could start getting constructive again and we move north of 100 and into that 100 to $120 per barrel range.
Right. So you're saying medium term, around near to medium term, 80 to 100, and beyond that,
Yeah.
100 to 120 is what we should aim for.
Yes.
Right. And overall, from a demand perspective as well, right? Now that everyone's moving to alternative fuel options, or even in terms of where EV is concerned is picking up, do you think that is something which could have an impact on crude?
It will impact crude, but it's not going to impact crude in 2022, 23, or even 24, 25 for that matter. We think that's a post-2030 story.
Okay. Okay. So you're saying it'll be another 4 to 5 years when we will see an actual impact of alternative fuels playing up?
At least, yes, because I think, as I mentioned, on the supply side, the kind of trends are structural in nature, i.e., we've seen an underinvestment for the better part of 5 to 7 years now, and it's going to take another 5 to 7 years to fix that on the supply side. Long story short, between 2010 and 2020, we had a period of very low energy pricing, which was effectively very, very strong growth from US shale production. We don't envisage another decade of very strong growth from the US over the next decade. So the question is, where's that supply going to come from? We already know that for OPEC, they're very constrained in terms of spare capacity. And yes, they can raise supply. Yes, they have the resource to do it. But the question is, what are the time periods on which they can turn that around? And that's more a 5 to 7 year story rather than something that they can fix tomorrow.
Right. And overall, if you see in terms of the impact what the dollar could have on the crude as well, again, a lot of dependency that's coming on the Jackson Hole meet, on the dollar. To that, how do you see the impact coming in terms of crude?
Yeah, I mean, the US dollar, I think the US has taken the approach that they have no option but to raise rates now. It's going to cause pain for the economy, but they need to bring asset prices down. Now, of course, a strong dollar for countries that import in, like, for example, in India, they're paying US dollars, their crude is getting more expensive. So you'd expect that to be net negative. But, I don't think that is going to be a significant driver of commodity pricing at the moment. I think the driver of commodity pricing at the moment is going to be more fundamental, i.e., it's going to be driven by supply, it's going to be driven by demand, and both of those are looking constructive, even when you factor in that we could be heading into a recession, even when you factor in we could potentially be adding 1 million barrels per day of supply from Iran.
Wow. Right. So to this basis, what we've discussed, Virendra, so far, anything else that one needs to actually understand from a crude perspective as to what one should be watching out for?
No, I think we've covered it. They're the main drivers at the moment. I think an investment in commodities is very, very good right now in a high inflation environment. Right.
So between crude and natural gas, where would your bets be right now?
I mean, the speed at which gas prices have been rising, in particular in Europe, would suggest that is a crowded trade right now. So I would say, if I was strategically positioning right now, I would be accumulating or potentially looking to accumulate a stronger position in crude over the next 6 months as opposed to in gas. So I just think the risks are skewed too highly on the gas side of things, just because there's a lot of policy and regulation drivers in that market, whereas crude is a lot cleaner. You can look at the fundamentals and take a bet on which way things are going to move.
Absolutely. And a lot of things happening globally as well, which we need to keep an eye on. But thank you, Virendra, so much for joining us on the show. It's always a pleasure to speak to you and get insights. Thank you. Stay safe and speak to you soon again.
Okay, thank you. Bye.
Bye.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.